Welcome back, Peter. Hiya, buddy.
Can you hear me?
Got you.
Hey, Peter.
Hi,
Hey,
Peter.
Steve. Hi,
How
Dale.
have you been?
Oh, good, thanks. Yeah, very well, thank you.
Good.
Good to be with you today. I just
Good
caught
to
the
have
end
you.
of your presentations there. So I hope we can sort of concur. You know, I'm not even sure. You've got so many lines on here. Gee.
Well, Steve does his technical work with his son, with Spider-Man, his son Jason.
Yes,
and
absolutely.
he throws out some of those, sticky, stringy things all over Steve's charts.
Spider-Man could do something that we can't. That's going up all the time. I mean,
well, I don't know. The S&P hasn't done a bad job with that. So,
yeah.
Anyway, Steve will get Peter to share his screen, and we're going to talk about something that because the dollar is so key.
Okay.
Want to go over this with you, Peter, because I'd like to kind of start off with your long-term count in Dixie, because I think it's something that Americans need to be aware of. That if your count manifests in the next several years, that people have to protect their wealth. I mean, people have needed to do this since Bretton Woods, but what you see coming here, as everyone could see, 49.35 for a downside target. It's going to cut their wealth in half if they're just sitting on cash or stashing cash. So, I mean,
this is
tell us about this.
Yeah, it's pretty severe, isn't it? When you look at this, I mean, one of the things I've shown when we've talked together in the past is a longer term cycle. Perhaps I just pull that up actually, just a second. But the long term cycles are very helpful in terms of seeing where the pattern rhythms are. One of the things that we get lost in day to day generally is the fact that when we think about the dollar, we always think, it's strong currency, it's a reserve currency. It's basically in an uptrend, but it's actually not. I mean, since 1985, it's actually been in a downtrend. And one of the cycles that I tend to show everyone is this one, which shows the repetition of highs and lows. And for those that are unacquainted with cycles, the term cycle is basically where we connect sort of peaks and a trough. And that particular in time interval, in this case, it's about 15.6 years from trough to trough. This is a generic cycle. And sometimes you get to price action here, which is a bit late. So we call this a right translation. And, if it's a bit earlier, left translation and so on. But generally speaking, if you have a centrally translated cycle, it means that you take the full cycle from trough to trough or from peak to peak, and you halve it. And the cycle is generically, sort of rhythmically, giving you peaks and troughs roughly around the same time. And that's what we've got. And this one obviously peaked here in late 16, early 17. If you remember, the dollar index topped out in January 17 here.
Right.
If I just mouse over that, you can see the date. And that means we're heading down. And to some extent, we can do, in cycle work, we can do what calls phase variancing, which means that we can align sometimes if tops and bottoms are not quite aligned, we can phase variance the cycle slightly across to the right or to the left. But when you look at very long-term cycles, this can often mean that you're shifting dates out 2 or 3 years at a time. So even though the cycle chart, this one is showing 2023-24, if we phase variance this slightly to the left, show that the cycle peaks, so this one would be shifted across a few years here and here, we could end up with 2027 quite easily, which is 3 years, taking more time for this to decline, which I think is, entirely possible. So we shouldn't necessarily sort of pin a particular annual date on such a long-term cycle like this. But what it does show is that we're heading down in, about 47%, 50% thereabouts, and that's significant if you're holding dollars. So how do you hedge that position? I mean, certainly we have.
Good segue. You don't need me today. I like it. Go ahead.
Sorry, you can interrupt me anytime you like.
No. I mean,
if I've got the podium, man, I'm on it.
Thank you for making this easy. No, go ahead. Yeah, definitely great segue. How do you hedge it, Peter? That's hedge it or spec on it, something.
Yeah, I mean, we have dollar income as a business, over time, I mean, you can go to the bank and you can say, right, well, we need to dollar hedge our income streams for the next year. Okay, well, that's fine. You can hedge it for a year and you think, great, I've made a bit on the hedge. I've lost a bit on the income stream. It's balanced itself off. That's what the hedge is supposed to do. But if we're 10% or 15% down, and then you say, right, the next year I've got to hedge another year because I'm only allowed to hedge 1 year in advance. Well, that's no good because you're already losing 10 or 15% income from the previous year.
Right.
Okay. And this is a problem that all businesses are going to face. They can't really hedge enough forward. And if you've got a depreciation like this, it's very, very difficult to do. So wherever you're trying to hedge, it's an unachievable goal. And we have to, start thinking in terms that we can hedge maybe a year at a time. But every year it goes down 10 or 15%. That's what you're losing per year over an aggregate period. So
do you think a lot of businesses will begin to accept payment only in euro?
Well, when I travel around the world in the last 15, 20 years, hotels, were normally quite happy for you to take local currency. And now, we're all transferring into dollars. You probably notice this yourself. You go on a happy holiday to Mexico or somewhere, and the hotel charges in dollars, US dollars, not in local currency. You don't get any benefit. And we might at some stage later on start seeing that shift in industry where, I don't know whether the hotels and industries will ever recover to what they've done before, but,
right.
You get goods and services and things. Yeah. If a dollar is depreciating over a period of time, then people will start to look at other currencies, accepting currencies in other terms.
Because we've had some famous people and countries, to their own detriment, want to be paid in euros when it was trading up there at 140. The whole world was bearish a dollar at that time. Last cycle, probably your last peak in the dollar. So it cost Saddam his life. And hegemony runs deep and strong, and I've got to think that the U.S. Probably is going to be happy about this move in the U.S. dollar, except for that it's going to inflate all asset classes and kind of make things look good on the outside, except for when you go to the grocery store.
Well, that's it. It's things like food and fuel, which are, I mean, obviously. The US has now become, the biggest energy supplier, right, in the world, producer. With I don't know whether that will change, with if we're going to stay around $50 on oil or less for quite an indefinite period. I think that there's a good chance it will trend up in the next few years if we get the dollar declining like this. I think gold, oil, and all these dollar-based commodities will have to go up a lot.
Yeah, you see long-term targets in triple digits one more time in the oil industry, and when you think about it in the oil price, right, Peter? And when you think about it, what would really accelerate the move to green isn't $40, $50, $30 oil. It'd be 120 oil or $100 oil. Okay, so you just have a rally back towards 81, which is still, pretty good rally.
I think I've upped it to about $90 here.
Okay, well, see that in 2023, if that's happening, then the move towards green energy, then it's a no-brainer because it's cheaper. Right now, it's kind of a push.
That's right. Well, I mean, I was at a conference earlier this week, and everybody was talking about sort of green energy and the fact that Norway's big sovereign wealth fund is no longer investing in things like coal, anybody to do with, sort of fossil fuels. They're moving away from all of that. And, there's a big drive for ESG sort of type portfolios. And, this is going to be persisting. I mean, it's, we're going to be looking at more green energies, more ways to move away from fossil fuel burning. But we're still going to need oil for cars. That is still, we're still 10 years away from when we're all driving electric cars. I think EVs are not quite with us yet. And some of the car manufacturers are only still well behind Tesla and others, because they're still building hybrids and for example, the British Land Rover division. If you go and buy if you want a new Discovery, you have to buy some sort of hybrid, which means that you can only drive electric up to about 20 miles per hour, and after that it clicks into diesel or petrol. That's not really a very long-term plan, is it?
Right. Yeah. So I wanted go back towards the dollar, and most people would know about the opportunity to hedge your dollar with precious metals and euro. What I'm interested in is what has suffered from a stable dollar, not necessarily a strong dollar, has been emerging markets, because there's all the debt denominated in dollars makes it harder for them to service it. So if we're going to have this type of dollar decline, there's probably, even though probably higher speculative type nature of these currencies, and because of perhaps government instability, but who are we to talk in America about instability? That there might be some currencies for people to consider a hedge against their dollars going forward that they may not have even thought of. I know that Steve Volge has a fundamental argument for owning rubles based upon debt to GDP.
Okay.
I guess there's also a pretty good carry. If you're long, you get paid to own them.
Absolutely.
Own ruble. And, so things like I've never, traded rubles before, but I mean, something like this is interesting. So this could be a hedge for your dollar if you put, you don't put all your dollars into it, but.
Well, I would certainly be holding, if you're sitting on dollar cash.
Yeah.
I'm not talking about day-to-day trading, but you just want to hedge against the depreciation in the dollar.
Right.
Ask your bank or your savings, division if they can actually open up a foreign exchange account for you.
Right.
We have those here in Europe, and I've had them in the UK before, where you just ask your bank to open up. I mean, they will charge you a service fee per month, but it might be $20-$30 to keep the account. You pay them a flat fee for it, but given the amount of money that your savings in there, then that's negligible cost per month,
right?
Compared to protecting your wealth. If you think that there's going to be a 50% decline, I mean, it depends. I mean, if you're only going to deposit $100, it's not worth it, is it?
Right.
But if you're going to put several thousand in, then it might be worth it, upwards. So you could open up a Ruble account, see how they feel about that. Ask them, see if you could, because this is a long-term chart of the Ruble. You can see from the 1990s, we've gone up exponentially, showing a great depreciation of the Ruble from 50 cents on the dollar to now you've got to stump up 76 rubles for $1, which is phenomenal. But I suspect that this will change, and that we're going to see some quite significant gains. What you could do, if you were able to, is maybe invest in a Russian index, for example, a stock index, which is ruble denominated. Then you're going to get appreciation of the currency, plus you're going to get the upside potential. I'm just going to go into stock indices here and just see. I've got something somewhere on Ruble or emerging markets, even better. I mean, but you need maybe the Ruble exposure. Let's have a quick look. Here's the Russia RTS, and yeah, okay, we've got this. This is our forecast for the RTS. It's going up a lot.
Oh yeah.
You know, I mean, this should go up a lot. I think we'll make new record highs in time. So this is always some way that you could look at, you know, buying something in Russia, like an RTS instrument, maybe an ETF or something, and that forces you to stump up, you know, exchange dollars for rubles. You'll get an appreciation for both, which is, you know, a double whammy, and that will far outweigh, you know, basically loss of income streams that you have in dollar terms, or for anything else.
Great idea.
You could do the same with Brazil if you wanted to. I mean, you.
Yeah, I'm starting to follow Petrobras.
Oh yeah.
After our last conversation.
Oh yeah, good. Yeah, good. I mean, Petrobras is good. We could buy Petrobras, GGB, which is one of the banks. I was introduced to another one, which is, you know, I mean, if you're speculative in nature, there was. I've actually got to do a bit of research on it today. It's a share price called Cogna. It's an educational equity, Brazilian equity, which one of my clients is asking about. And yeah, at the moment, it looks as if we've got some pretty interesting scenarios here. We've got, going back to the financial crisis, big 5-wave pattern up, a nice 3-wave correction. You know, it's coming down in a correction at the moment, but that's okay. It's a great opportunity to buy this thing. This thing will go to massively to new record highs. I mean, it's trading at $5. I think this is 5 real. So
okay. So the same type of concept. You're buying the real along with a nice stock chart.
Exactly. And here's the currency, and you know, this entire 5-wave program up here is finished. We're going to see massive appreciation in the currency and a devaluation of the dollar basically against it.
Yeah.
You know, this thing is going to start running down like this over the next years. So yeah, I mean, don't be fooled by the inactivity at the moment, but you know, this thing is something that you can easily do.
Yeah, these are you know, this is a great opportunity. You know, it's, well, you know, what the Chinese say, the definition of opportunity is danger and crisis, and really the danger is you miss the opportunity. Danger and opportunity. So you know, there were some people today talking about the lira. I guess it's made new lows, and last time I talked to you, you said there'd be another high in the Turkish lira. Not that I'm interested in I think that one I would just take a pass on, but it's been one of the weakest currencies, and you said some of these other ones may have already made the turn, but the lira had
I think
wave left.
I think we've got to get up. I've got to update this a little bit, tweak it a little bit, but I think this target at 860, 859, 858 is about right. Probably could do with a bit of a retracement first before getting up, but I think it's, you know, I mean, it's in its last phase of development to the upside. So
I guess there's some geo stuff going on with Turkey right now, right? Geopolitical stuff, you know, war talk, or I don't know with who. You know,
well, yeah, Erdogan has, you know, I mean, he's pretty much got things under wraps there. He can do what he wants pretty much, but they've got still quite big inflationary pressures going on, which is fueling the weakening of the currency. That's why you're seeing it trend up still. But I think that could change as soon as the dollar finishes its counter trend rally. And we can take a look at the short-term dollar index in a moment again. I flashed it up earlier just now, but once that happens and starts turning down, then the dollar ultimately will probably sort of trend down against most, including this. So I think that this overall picture is coming to a phase where it's probably not got much left to go.
One of our attendees just made his call. He said it's going to 10.
It's going to go to 10, as high as that.
Yeah.
And why? Why,
Amira? Because who told you that?
Is there a reason why it would go to 10? I mean,
yeah, just because you have a feeling, or technically, or
I mean,
You
I
just
like
wanted you just wanted some attention today.
Well, we all like that. I mean, we all like a bit of attention.
Yeah.
No, I mean, it would be good to know from our friend who's, why he's got 10. I mean, I'd like to try and substantiate that. I use a lot of fib price ratios, and this one I've extended waves 1 to 3 by 61.8. That comes in about 844, a little bit higher. And I
Also,
mentioned on the other charts.
we have a Brazilian in here, Gustavo.
Yeah.
Is from Brazil, and he said the fundamentals of COGN3 are all very good.
Good, excellent. Thanks for the thumbs up.
He said.
That's good.
So what do you want to? You've been here so many times, Peter, and really, I love your stuff. And if you want to wrap it with the dollar, the short-term dollar index, but you know what, your prices are very reasonable for the type of work you do. I know the time you spend there, and I want to make sure that people check you out. So,
thanks a lot.
Okay, and you know what? And it's not just currency. Peter made a great call, the bottom in Bitcoin at 3. And then, when everyone was getting bulled up, he saw another pullback to 7. And here we are breaking out. So, it's not just currency. Everyone's wrong sometimes, Peter included, but I've seen a lot of great forecasts from you, Peter. So I'm hoping people include you in their intelligence gathering.
No, thanks a lot. I mean, just we can wrap up in a moment with a look at the Elliott Wave Compass report. It's $39 a month. My God, if you can't afford it, and you might as well stop trading. But we try and make it as competitive as possible. And when clients normally subscribe, we keep them. We don't have any rotation. It's been really great, and people are so nice and friendly, and we're happy to sort of bend over backwards to try and help you. If you've got a query, you can always interact with us. So we're quite happy to do that. I mean, I've just shown Bitcoin, but actually, Bitcoin, I think if anybody's listening and interested, I think this downswing here back in August, September, I don't think that's fulfilling the entire categorization of a good second wave correction, having finished 5 waves up from March. So I'm working off the assumption that we're in an expanding flat and we've got another leg down. But that will only happen if the stock market drops, because I think there's quite a fixed correlation there. And if the dollar starts to pick up again, as I think it should, that will also trip down, because don't forget, this rally, this very, very strong rally that we've had this week, has been backed up by the dollar's weakness. And it's been very evident. So if we want to see what the dollar's doing, my guess is that we're bottoming out here. This is a little bit of a zigzag correction for wave X. And the preceding upswing from the beginning of September is the first zigzag in what we call a double pattern that's going to trend up here. Again, proportion in your working with Elliott Wave, you need to really start thinking about proportion and where the tendencies are for patterns to correct to, how far they extend to, and our work on fib price ratios basically has been a bit pioneering in the last 30 years. We did this far beyond anybody's ken before, and we place a lot of emphasis for it because it can tidy things up as well. But here you've got 5 waves down from March, and Elliott said that a correction should get back to wave 4 preceding, and that's sort of roughly in this price territory here. And that's why this first zigzag isn't enough, really.
Right.
And why we should get, in the next few days, this should bottom out. I think we might get one more twist down tomorrow. By then, we might start getting this swing up. I don't know what's going to trigger that. Maybe, the negotiations for a new aid package in the US takes a back seat. It fails because a lot of the pressure on the dollars come because there's inflationary pressures coming in. This is why the dollar's going to be going down in the next several years, and why interest rates are going to be going up a lot. You're going to see the dollar collapse. You're going to see commodities like copper and oil go up a lot during that phase. Maybe gold quite a bit too. There's still a leg missing to the upside on gold at some point later. Not now, but I'm bearish at the moment on gold. So yes, there's this is all tied into it. But I think we can get the dollar up here first.
Yeah,
Before
so
we
that'll be a
start.
good time to, you know, a little bear market rally to maybe lay on some of these, you know, COGN positions or Russian RTS positions, something like that, after we've squeezed some dollar bears out for a while.
That's right. I think one of the other questions I normally get on the currency side is, you know, okay, we look at dollar Canada. We know Canadian dollars linked to oil. The Aussie dollars linked to a lot of, you know, things like iron ore, some of the big commodities like steel and stuff like that. What are they doing? But we were asked, you know, what's Aussie dollar, Canada dollar doing? You know, because these two are competing commodity currencies. And from what we can see, if anybody's interested, is that, you know, we suspect there's a bit of a correction coming down. This is very atypical to what the stock market looks like. Stock market bottomed in March. It's had a 5-wave price swing up here. This meant that the Aussie dollar was outperforming.
Right.
At the moment, it's in a bit of a regression phase. Now, that could mean also, if the Aussie dollar is coming down and Canadian dollar is going to increase in value against it in a little while, that probably, you know, goes hand in hand with the stock market dropping down a bit, and probably also goes hand in hand with oil dropping down a bit as well.
Okay.
Because I think oil prices, if you want to look at that, you know, oil prices should also drop back down a little bit.
Low 30s, first stop.
We should come down, yeah, low 30s, exactly. Here it is, 33 and a quarter.
Yeah.
So I'm thinking that I'm short a bit of oil at the moment. I had a nice drop in the last 2 days.
Yeah.
But we should be, you know, you can put a stop above the high. You know, it's, if you're looking for $33, you know, that's a good trade to put on if you're interested in doing something like that.
All right. Well, why don't we go to your website so that you know, people can become part of your community and get your research and you know, get this type of input daily. You know, at least on the letter. And you know what? You don't need your stuff daily because your roadmaps. No one needs to follow anyone's roadmap blindly, but the road for me, this is how it works. Your roadmaps give me biases, and then I still use my work with RSI and pattern recognition to execute or make recommendations at those levels when my work with the bias I get from you manifests.
Great. No, great. I mean, thanks, Dale. I've just logged into the Elliott Wave Compass report. This is $39 a month. We publish a report twice a week, and we put quite a few contracts in here. You can see the stock indices, currencies, and if you just click on these things, these thumbnails load up fixed income. Well, and we've got commodities, gold, silver, and crude oil. But basically, if you can use this application, you'll have access to it. You can review the report online, or you can download the report here. And if you click on the S&P, you can start scrolling through all the charts in the report. You can actually see them listed here. These are all. So we've got quite a big variant that we type up and write about. You know, there's lots of currencies in here, and we alternate a bit between, you know, each week Shanghai Composite versus Hang Seng. Or we put Canadian dollar in sometimes here as well, and the regular features. And if you want to subscribe to that and take a look at that application and learn, just go to wavetrack.com, go to client, where are we? Registration, subscription.
And I just posted the link in chat.
Oh, thanks. Okay, that's great. And here you can subscribe, and it says $39 a month. And there's no auto renew on this. We left it so that you can take it for a month, and if you don't like it, you can leave it. You don't have to contact us, or you can get a little bit of saving if you want to subscribe for longer term maturities. So it's very flexible, and yeah, you won't get tied into anything more than a month, and it costs you $39.
Okay.
How's that?
All right. Well, I want to thank you, my trading warrior brother. Some great ideas. Really appreciate you coming here and being really generous and sharing a lot of forecasts that people could take advantage of and execute at their own peril. So
I like the peril bit at the end. Yeah.
well, that's my that's my disclaimer. Someone what they say is it safe to trade now? And I go, well, that's an oxymoron. Anyway, thank you so much, Peter. And
thanks, Dale.
Yeah, really
good to be with you today, and
here.
thanks to you, and have a great evening. Yeah.
All right, take it easy, Peter. That's
Adios.
a wrap for us today, everyone. Today is Thursday, I believe, so that's going to be TGIF tomorrow. Hope you enjoyed Peter, and we'll wrap up the week tomorrow. Remember, oh gosh, I almost forgot. Don't just count your cash, your coins, and your cars. Count your blessings. I'll see you guys tomorrow. All right. Adios.